Greetings, Algo artisans. Fun week in the market. We're going to take a look today at charts for Pepe, Bitcoin, and Solana and do a quick market wrap up. So let's jump into the charts right now. Quick reminder that nothing we say in any of our videos, work, or website is to be used or construed as investment advice. Please consult a licensed investment advisor before risking your money on the markets because you can lose your money. It's risky. Okay, so we're going to start with the Pepe chart. Pepe is looking interesting. I actually predicted some of what you see on the screen, and as much as I'd like to say that I predicted all of these arrows that I'm about to erase, I did not predict these. However, I did predict what went on right here. I figured it might go a little bit lower, but essentially price ranged in this area, and it is what I said it would probably do. In the meantime, it might be ready to break out, but we have to be careful of the range. So every time there's a range, price tends to respect that range, and you can divide a lot of this price action up into just those ranges. So let's take a look at this current range right here. This is a decent way to map this range out. A lot of price action was pivoting down here at that 1290 area. And until price breaks above that, I would not be looking for Pepe to take off just yet. Obviously, a lot of people like and watch Pepe and made a lot of money on Pepe this year. However, Pepe is going to be subject to Bitcoin and all of the rest of crypto market. And as it stands right now, we do have a little bit of bullishness on the daily algos as well as the weekly algos. I'm looking at the weekly on this crazy looking screen that you see right here. We're going to flip back to the normal screen. There is a case for Pepe to go up, and this is literally matching Bitcoin's movement right now. So we're going to jump over to Bitcoin shortly, but this current movement up is reflective of Bitcoin's price action, telling me that Pepe at this point is not on its own with price action. It is merely following the Bitcoin market. And we're going to take a look at Bitcoin next so you can see what I'm talking about, but you did have this move up and then of course a pullback. Not quite a 382, but I think it's close enough. We're going to run a fib audit right now. Here is the extension, the impulse that we're going to look at for the Fibonacci. There was an attempt to break out, but it failed. And right here, right just barely above that 382 is where price is right now. And if we were to extend this Fibonacci to that little peak right there, which is not the worst thing to do, we could have that pretty much at a 382 pullback. Now, 382 pullback is indicative of bullishness. The problem we have here is you have a lot of pivot points just above price right now. And where price pivoted before is where price might pivot again. You have a lot of pivots in this general area with price. So that being the case, going back through history, I would be very careful of going long on this until it's actually broken out. Now, if I were simply very confident that this was ready to break out, I would have taken a trade down here last night, and I did not do this, but the trade would probably look something like this, where I would use Fibonacci data to gather my targets, and my targets would be sitting roughly at 1413 and 1567, and that's a good trade. However, price has gone up since then, and what would have been roughly a 4-to-1 trade, risk to reward, is now sitting at a 2.5-to-1, which is a very different amount of money to be made should this trade go to target. So what I probably would do is either look for price to head back to the bottom of this range, and if I were confident the price would eventually break out, I would take a much better trade based on risk to reward. What I think will probably happen though, based on what I'm seeing with Bitcoin, there is a decent probability price will break out of this range, break above that 1290, 1300 area, and we might be able to see a nice entry for a long. And if that is the case, my trade would look much more like what it should be, a breakout trade. My stop loss would be below some of the structure inside of the consolidation, and I would have the move up right there. It's still about a 3-to-1 trade, and if there is a pullback entry, then you can have a much tighter stop loss and have even a 4-to-1 trade. So that really depends on how you set your stops, what type of data you use for your stop losses, but that is either anywhere from a 2-to-1 to a 4-to-1. Okay, that's a beautiful trade right there on Pepe, but I don't see this happening until Bitcoin breaks out, which would cause Pepe to break out, and that's just where it is right now. Let's review what Bitcoin is doing this morning in the charts. Now, this is a pretty strong breakout, and this breakout is stronger than what Pepe is doing because right now, price is higher than its prior high from last night. And this is the move that we just mapped out for Pepe. Pepe is literally following this. However, Pepe is behind. The high for Pepe is below the high that Pepe made before yesterday. That being the case, Bitcoin is still leading the market, and I'm actually pretty comfortable comfortable with a breakout trade on this. I may even take this trade now the price has broken above. If this closes above the midpoint of the range, essentially where it is right now or higher, I might take a trade with a stop loss below some of this structure prior to the breakout and have a trade that looks like this. And that's a pretty decent long. Now, Bitcoin is dangerous. It will drop down to grab liquidity. So what we probably want to do is update our liquidity based on the Kingfisher.io and see where those might be before we take any trades at all. Okay, so let's hit the refresh button and see what pops up on the charts. Most liquidity is sitting between 58,000 and 59,400. So let's put that on the chart, 58,000 up to 59,400, and we will code this yellow as that in my own chart parlance reflects liquidity. Now the good news is that liquidity in this case is so far below price, I'm not very concerned about price going down to it at this time. Now, if price were to flip around, the algos were to flip around, remember that weekly algo is pretty bullish. So even though we're getting some bearish moves on the daily, the weekly is taking over and pulling price up. I'm not worried too much about this liquidity. There is other liquidity on the Kingfisher, but it's pretty mild. You're going to see a little tiny bit here at about 64,500. So we can just drop a line right there, right about there, which is the stop loss. So what I might do, because that's the theoretical stop loss, I'll take my stop loss a little bit below that, right? Because price, if it were to dive down, would want to grab liquidity. And what's going on in here is that people are taking this long and they're putting their stops right there. And that's why you're seeing that. Also, what it really is and why it's on the Kingfisher is that is where people's trades are liquidating. That's where people are setting their liquidation on their leveraged trades. So I would be below that by a fair degree. And it's going to reduce my risk to reward. However, as I go into profit, I can add to the trade and I can cut off risk and make this a much better trade. 2-to-1 risk to reward, meaning that I can make 2,000 for every 1,000 I trade. If the trade goes to all two targets and I don't take any profit until then, that is acceptable in my rubric, in my rules. Okay, so far, this is a good trade. Let's take one brief look at the liquidity to see what else might happen. The only liquidity notably to the upside is at about 69,700, and that would be where a target might be, and that's up here. Really, 68,750 would be my first target here. So that liquidity only supports this decision and therefore is not very important. So that's a trade on Bitcoin. That's what I think is going to happen, and I think it's going to happen in the next day or two. It could pull back. Many things can happen. There are a lot of crazy things happening in the world right now, and any sort of attempted assassination of a president or crazy business like that can throw markets into a tizzy. But this is why we have stop losses, and this is the risk we take when we trade. So let's move over to Solana and see how that's doing. Solana looking like Bitcoin. Okay, so we talked about it this morning, and Solana now is at that first target. It has broken above this descending trend line, if you will. This was a part of a much greater trend line going back to March. So as Bitcoin was consolidating sideways, Solana kept selling off lower and lower and lower, indicating that the bears were getting more and more strength. But it appears that with Bitcoin having quite possibly made its bottom and heading up, it might be that the bears are losing their moxie and Solana might go ahead and invalidate this very bearish pattern. Okay, and that's a pretty big bearish pattern. Now, of course, price simply could reject and head back down into this pattern below that trend line. However, it hasn't happened, and if price can close on the daily candle above that, and then maybe another daily candle as well, or if price can make its way up to about 180, that's when we might be able to see this whole thing invalidated and Solana be a bit more bullish. I hope this video was helpful. Please come over to algofactory.tech. We teach people how to build their own trading method, otherwise known as an algorithm. You don't have to know how to code, but if you do code, we can put you on the path to where you can build something that trades for you while you're not at the computer. If you just want to trade manually, which is what most people are doing, then that is, of course, something that we can help you do and help you have the capability to possibly extract money out of these markets on a regular basis. And while we do focus on crypto for a lot of these videos, I'm actually primarily a Forex trader, and you got to know that crypto doesn't go forever. It goes for about a year and a half, and then for a couple of years, there's not much going on in crypto. And if you want to be a trader, you're going to want to understand how to really trade, how to put on those big boy pants, because what's going to happen is eventually crypto's going to flatten out, and the meme coins aren't going to be what they used to be, most likely. I've seen it enough times. I've been in this game since 2017. I don't expect that to change. So come on over, learn how to trade. As a matter of fact, we got some pretty happy customers who are already down the path of success in their algo building. Let's hear from one of those right now.
Hey, Cowboy V, I just wanted to give a heartfelt thanks for putting this project together. I initially joined Algo Factory a year ago, concerned about a repeat of the 2008 great financial crisis and the prospect of losing my job again. Within 12 months, under V and Cowboy's expert tuition, including live reviews, I've created a profitable algorithm launched across a selection of assets. Now, facing the prospect of redundancy and a nice fat severance package to trade with, my current worst case scenario is to keep my job. Thanks again, guys. Really appreciate what you've done here.
So that's it right now. That's what we've got time for. Don't forget, algofactory.tech. Trade your job, upgrade your life, and we will see you on the next one.